So just to kind of dive right into it. So I think our readers, our listeners and viewers have an understanding of everything that was happening on Reddit and within the world of an investment more broadly. I think in a very superficial way. And I think a lot of us maybe understand the broad strokes of what is happening. But could you give just a quick overview explainer of what's been happening in that specific regard, and how that kind of contrasts with the kind of investing that probably our viewers are doing, which, like I mentioned earlier, is things like, they have their mutual funds and their 401ks and so forth. Like, explain that to us.
Yeah. And this is for me, as a professional who prescribes more to the long-term investing, stay the course, low cost index funds approach. We agree on that wholeheartedly. And here comes this, sensational story surrounding GameStop and short squeezes of hedge funds and the Wall Street bets crowd from Reddit. And it's really kind of a culmination of a number of things. You have access to technology and free trading, the democratization of trading through Robinhood and various applications. You have free flowing communication through Twitter and Reddit to be able to build communities together like an army. And then thirdly, you have low interest rates, cheap money. And fourth, you have stimulus. You have actually giving people money. So we've created this environment since really the pandemic over the last 12 months where we now have a group of Redditors, this community identifying which companies had the most short interest against them, meaning who was betting against those companies. And lo and behold, some hedge funds here were really shorting GameStop to the tune of 140%. So they were shorting it 40% more than shares that even existed. And this caught the attention of the Wall Street bets crowd and the retail trading crowd. So what they did is they decided to buy as much GameStop as they could, bidding up the price, squeezing the hedge funds that were shorting it. And they were successful at doing that. And it created the story. That started the whole thing. And then what happened is they stopped trading GameStop and AMC and these meme stocks on the various exchanges. Robinhood did it, other brokerages did it, and now you have the David versus Goliath narrative kicking off here, right? So the little guy, as soon as they start making money, optically, the rug gets pulled out. They stop the game. They change the rules. People are piling into this narrative, the Dave Portnoys of the world, Chamath's getting involved here. Everyone's jumping on. Really, this is a very tough narrative to beat or fight against, the whole, Rocky Balboa, Dave versus Goliath thing. So that's happening now. Almost done. And then all of a sudden, Robinhood, it turns its back on the very people that it was supplying the platform with, and the David versus Goliath narrative, it gets pulled into that. And now it's just an utter mess. Now, the one thing that no one's really talking about, because it's very esoteric and it's very nuanced, is what was happening, I guess in the plumbing of Wall Street. And how all of this trading really has a lot to do with how Wall Street is built as far as transactions and flows and settlement of trades. And nobody wants to talk about this. I'm not going to bore anyone in this, but basically those pipes burst and explode. It's like they burst inside your wall and exploded, and now there's water everywhere. So long story short, they tried to squeeze the hedge funds. They paused the game because the pipes burst. Everyone's mad on the Dave versus Goliath populist narrative. And here's the aftermath now. All those meme stocks are coming all the way back down. And it looks like a lot of people are fatutzed here.
So many things to unpack. So first of all, I would love if you could break down for our audience. It's so funny, like 2 days before this happened, completely by chance, I was rewatching one of my favorite movies, which is not about the exact same subject, but has a lot of the same broad strokes, a movie called Margin Call, which I highly recommend anyone who's interested. Very good. I find highly underrated. Usually The Big Short gets all the love in 2008 crash movies, but I think Margin Call is excellent. And it does have a lot of kind of similar broad strokes in terms of the dynamics at play. And one of the sort of underlying dynamics, obviously, Margin Call is about the 2008 crash, which is, mortgage-backed securities. And we're talking about a slightly different situation there. But ultimately, what you're really talking about is, these Wall Street firms, these hedge funds, et cetera. In the case of margin call, it was clearly based on Goldman Sachs. But you're talking about these firms which have been playing the market, quote unquote, like a casino for years and years, who are able to do so partially because they have the money to, partially because, the regulation around a lot of this stuff is pretty favorable. But when people talk about these firms, like they've been playing the market like a casino for years, and now that the individual wants to do that, now we're like, ooh, let's hold on here. What does that really mean in practical terms? Like, what have these firms been doing that people are taking issue with, and that led to that sense of we got to get their asses via Wall Street bets in the first place?
Yeah, the stick it to the man,
Totally.
type of thinking. I think so you have these hedge funds that have been playing the game this way for a very long time, whether it's putting, more short interest against a company that even exists, throwing their weight in dollars around, knowing that the retail trader doesn't, have the same scale or capital to really play the same game. And all of a sudden that got created, that level of scale, that level of power through, a community like Wall Street Bets, through the communication and, the things that I described earlier. And yeah, when all of a sudden, again, nobody will, when the narrative's already David versus Goliath and the whole populist thing here, when that's already taken shape, good luck to you. Put it in let me back up. Put it in Robin Hood's perspective here for a second. They literally had to stop trading or there would not be a business. Robin Hood wouldn't exist. The costs were too high. They made the right business decision, but they communicated that very poorly to where they eroded their entire brand loyalty, right? To people who, were using that platform to fight, so-called fight against these hedge funds, because now they were able to play the same game that the hedge funds were playing. And you have to wonder, if there wasn't that plumbing issue, if they did not stop trading, how far would GameStop have gone? And I think that's their argument here. Like, if you didn't take the air out of the balloon in the middle of it, where would we have gone? You would never have done that on the institutional side of things, but it happened to us. So go grab your pitchforks kind of thing, right?